Hey, good morning, people. Those of you that are interested in getting to know the insurance chapter in your business studies module for grade 12, if you want to get to know it a bit better and just to get a better overview of what is important and what keywords to look out for when explaining your terminology, then I'm going to go through all the information now. And because this is a video, I would like for you to play and pause, stop and pause whenever you can to see which of the terms I highlight in the information. Okay, those will be the indicators to what needs to be part of your summary when going into the exam. Okay, so we're going to be doing insurance today. I feel like this is a good chapter to do a video on because it's quite intricate. It's new information. You didn't do it in grade 10 or 11. So it is basically new information. Okay. And what we want to make a point of in this chapter is there are a lot of definitions that you need to know. So when you are preparing your summaries need to be at least 1 or 2 pages long, and it needs to have all the subheadings. By subheadings, I mean these headings, okay? Because your questions basically are formulated from these headings. So if you understand and can recall these headings, then already you have the question paper in front of you. Okay. All then that you need to know is how to answer the questions based on the facts. Okay. But it lessens the anxiety because you know what type of question to expect from the exam. Okay. So the meaning of insurance, let's cover that. It is basically a covering for a possible event that may cause a loss or damage. Okay. It is basically protection against loss. Okay. An agreement whereby the insurer take note of the names of the parties. Okay. And also to indemnify, get a nice idea of what the word indemnify means in this chapter. And we will cover some characteristics of indemnity. And yes, so you will understand then why the word indemnify is significant to this definition. Okay. Bear in mind, we're not talking about assurance, we're talking about insurance. With assurance, there are words such as security and more long-term definite events that happen. But insurance in general is to indemnify the insured in the event of any loss or damage. Okay. The insured pay a premium. Okay. And a contract between a person, business insured requiring insurance cover, and the insurance company bearing the financial risk. Okay. So insurance is also based on a contract. Okay. And the contract is basically agreeing that the insured, which is the person taking out the insurance, they are agreeing to pay the premium per month. And the business that is offering the protection, they are offering protection, financial protection in that case, in that contract. Okay. And they sign it and it is legally binding. Okay. Non-compulsory insurance is basically insurance that is voluntary, which means, if I think of the word voluntary, it is by choice, which means then if you think about insurance that is by choice, it is like pet insurance, fire insurance, theft insurance, those types of things. Those are all non-compulsory insurance. Insurance will enter a legal insurance, sorry, insured will enter a legal insurance contract with the insurer who may be represented by an insurance broker. Okay. All good. I think we're good there. I think the big words is, for example, knowing that it is part of a legal insurance contract. and that there is a possibility that the insurance broker can be involved in that process of non-compulsory insurance. Okay, then we go to the description of insurance concepts. These are just concepts that we should know. Hence, I said in the beginning, it's very much about understanding what concept goes where and what fits in where. Okay, with over and under insurance, it's about the market value of the asset. So if the asset is 5 Rand and you insure it for 10 Rand, it means you are over insuring. Okay, it means you are, this means that extra money is paid to the premiums will not be paid out to the insurer. So over insurance is basically when you overcompensate on the value of the asset. Okay. With under insurance, you are now paying to protect or cover the asset only maybe by a portion. Okay. You are insuring it for less than its market value. Okay, the property or asset is insured for less than the current or actual value of the property or assets. Okay, all good. And then the average clause is basically only included in the under insurance, because under insurance, the average clause is basically the sentence that states how much of the assets, how much of the asset's value you will get protected for. Okay, so if you are under insuring, right, your value of the asset is 5 Rand, but you are only paying a premium that covers 3 Rand of that value. So then the premium will be less per month, and then the amount that is paid out to pay for the cover of that loss will be less as well than the market value. For example, if you have a car that is 200,000, you insure it and then you write it off. They will check how much you insured it for, and if you insure it for 80% of its market value, then that is the amount that you're going to get paid out when you claim from the insurance. Okay. Bear in mind, there are also things like utmost good faith, security, all those things that you need to uphold in the principles of a contract, of an insurance contract, basically. Those are the things that we need. We're going to go through it just now, but just bear in mind, yeah, the average clause stipulates how much the insured will be paid out by the insurer. Okay, all good. So then here is the calculation for the average clause. They like asking this question. So for me, it is about you being comfortable with doing this calculation in the exam. They will give you something like this, okay? And it's your job to identify which is the amount insured, which is the amount of damages, and which is the value of the item. Okay, and it tells you exactly what it is. Peter owns, and just go according to that formula. Okay, so the amount insured, valued at, so this is the market value of the asset. Okay, so it's that one. Okay, and then he insured his house for Pro Cover Insurers for 800,000. That's the amount insured by. Okay, so you can see that he's not fully covering the whole asset. Okay, he is only covering 800,000 rands worth of the asset, which is basically 80% if you do the calculation there. Okay, a fire in the kitchen caused damage of 30,000 rands. That is basically the amount of damages that is due to the insured if they covered 100%. But because they're underinsured, we need to do a calculation to see how much the insurer must pay out to the insured. Okay. So there you do the calculation, that is the 30,000, the amount of damages. Do the calculation there, you get 24,000 bucks. Okay, this amount must be paid by the insurer to cover the damages. Okay, reinstatement stipulation whereby you actually get your goods back instead of being paid out. You get the goods replaced. Okay, stipulation is applicable when property goods are overinsured. Here they say may replace lost damaged goods instead of reimbursing. Okay, the reinstatement value will not be higher than the market value of the loss. Okay, so will not be higher. That is very important. Okay, take that down as part of your summaries. Insured is restored to almost the same financial position as before the loss occurred. Okay, so you will get, that's why it is closely linked to overinsurance, because overinsurance covers 100% of the asset that was insured. Okay, good stuff. There's an example. Check it out. It's very, very important that you know what reinstatement is and how to word it in the exam, because it's very closely linked to the average clause and reimbursing and paying out goods, you know, so just make sure you understand the difference there between those. Then the excess is a clause which states that the insured is responsible for a fixed amount of the claim when submitting a claim. Okay, so they normally take a percentage of the amount that is paid, and that is the excess. The excess then in this case here would be 6,000. Okay, it's basically the money that is not paid out by the insurer, but is still due to cover the causes of the damages. Okay, so that 6K is the excess that is normally paid by the insured. Okay, good stuff. Then we're going on to the differences between insurance and assurance based on the principle of indemnity, whereas this one is based on the principle of security. So insurance is indemnity and assurance is security. Why is this the case? Because assurance is something that will definitely happen. Okay, they mention it here. They say specified event is certainty, but the time is uncertain. So it's like life insurance. If you pass away, which you don't know when it will happen, but it will definitely happen, then this assurance takes place and covers losses. Insurance, it is basically on a specified event that may occur. So it doesn't necessarily mean that someone is going to steal from you, or that, for example, that there will be a fire. Okay, so this is more a maybe type of insurance, and this is a more like it definitely will happen. It's just the time that is uncertain. Okay, applicable to short term, applicable to long term. Be sure to include that in your definitions and also in your summaries. This is an easy 2 marks. Easy 2 marks if you just memorize that and you're sure to include that in the differences. Okay. Also, knowing the examples, you get awarded marks for that. So just knowing one example for insurance and one example for assurance already puts you in a better position. Remember, it's not about knowing everything in detail as much as knowing a lot about everything. No, knowing a little about everything. That's actually better. It puts you in a better position to get a better mark. Okay. The advantages of insurance, they love asking this question. It's basically the reasons why we take out insurance. Okay, it is to transfer risk from the business to the insurance company. It is to transfer risk, is subject to terms and conditions of the insurance contract. So it's not just, okay, you must pay everything. There's a contract that states how much you must pay, and that. So that's also an advantage because there's more certainty on that. Okay, protects the business against theft, loss, stock, damages caused by natural disasters. We know this. we know that it protects the business. In this case, right, I want you to just be careful here to not repeat yourself and to mention what you are talking about when you're talking about protecting the business against what? Loss of stock, damages. Okay. Very important that you mention examples there. Businesses will be compensated for insurable losses. Businesses' assets, vehicles need to be insured against damage or theft. Businesses are protected against the loss of earnings. So, dishonest employees, if people steal from your business, then you can claim from your insurance, especially if you were not part of the shenanigans. Life insurance can be taken on the life of partners in a partnership to prevent expected loss of capital. Okay, we do this. I think a lot of our parents have that in place, and if you don't, then you maybe have like funeral policies and things like that in place. But all of them serve the same purpose. Okay, protects businesses against losses due to death of the debtor. Oh, good. Okay, insurable risks and non-insurable risks. I think just understanding that there are certain risks that a company can cover, but then there are also other risks that a company can't cover. Okay, now this is what this concept is all about: insurable risk and non-insurable risk. What can the company not cover? Okay, we know what they can cover. We've been talking about it for quite a long time. There they are, an example. But what can't they cover? Okay, basically, and the reasons why is risks are too high remains the responsibility of the business. Okay, but I think it's basically, it's mostly based on the risks are too high. So the insurance company will be bankrupt, for example, if they have to pay out the losses caused by war. Okay, if they have to pay out the losses made by changes in fashion, or if there was an advancement in technology and now it's caused your business to go bankrupt, then there's no ways that you can claim for that because it is non-insurable risks. Okay, so I have that concept ready. They love asking this for about 4 marks, the definition and an example. Okay. Short-term insurance, there they are. That's normally what we've been talking about: burglary, theft, fire. And then long-term insurance is basically endowment policies, trauma insurance, funeral insurance, health insurance. I just want you to understand that long-term insurance is not the same as compulsory insurance. Okay, we're going to talk later about compulsory insurance, which is your UIF, your road accident benefit scheme. And there's another one as well that we will look at. Okay, but that's not the same as long-term. So when they ask you in the test for long-term insurance, please do not answer compulsory insurance because they tend to mark that wrong. Okay. Then here are the principles of insurance that I mentioned earlier. And I said all of these things need to be part of the contract for the contract to be deemed valid. Okay, so there needs to be a form of indemnification. The insurer agrees to compensate the insured for damages and in return for premiums paid on by the insured. Okay, so this is a bit of a repeat of the information. So what I would do here is I would look for information like the amount of indemnification compensation is limited to the amount provable loss or the damage, even if the amount in the policy insured contract is higher. Okay, so it's those nitty-gritties that I would, if I'm preparing myself to answer principles of insurance, I won't stick to this information here where we talk about compensated for specified proven loss, because there might be a question that you've answered earlier where you've spoken about advantages and you've mentioned that information already. In that case, it doesn't look good, and those types of answers normally get deducted marks. Okay, so when you're preparing this, don't take the easy information. Take the information that you feel is the most comfortable, but also not repeating from the other facts that you've learned. Okay, insured may not profit from insurance. Okay, there are some cases though where people use the insurance to benefit from that. Okay. Certainty applies to long-term insurance where the insurer undertakes to pay out an agreed amount upon an agreed upon amount in the event of a loss of life. This is when we were talking about the life insurance. Okay, it is, so this is the assurance part, and this is the insurance part of the contract. So the contract must either state that it is an indemnification or it is a security. Okay, depending on what you're offering the insured. Okay, aims to provide financial security to the insured at retirement, the dependents of the deceased. Okay, cool. Utmost good faith, honest supplying details. Now, I have had a friend of mine. We used to drive together, and he was in an accident with his bakkie, and then he literally had to draw the way that he remembers the situation, because maybe there were eyewitnesses that the investigators now also got in hand. And if his story doesn't go with the eyewitness's story, then that becomes a thing where, you know, the contract can be voided. Okay, and then that it becomes like the people don't pay out your goods because you weren't honest in supplying details when entering in the insurance contract. That is in the event, but also they normally ask you, like, where does your car stand? Does it stand in a parked garage? Or so say now someone breaks into my car and my car is standing on the road, and I said to the insurance, no, my car is in a garage. They find out that it's not like that. Then because I'm paying a lesser premium. Premium is the amount that you pay to the insured, to the insurer. Okay, every month. Now, if your car is in a garage, that influences your premium because it's safer, there's less risk, so the premium is lower. So if the investigators come out and they see that your car is not in the garage, actually standing on the road, then it means that you haven't been paying the correct premium, which means they can refuse to provide you the service that you agreed on in the contract. Okay. So utmost good faith is very important, especially if you want to uphold your contract and make sure that you do get your claims. Okay. Insurable interest must prove that he or she will suffer financial loss if the insured object is damaged, ceases to exist. Okay. You must basically be able to say, listen here, this asset of mine is 80,000 Rand. This is the amount of capital that I have. If you can see, if this car doesn't work for me, then I will be 80,000 Rand in debt. And I need that 80,000 Rand from the insurance to cover that loss. Okay, so insurable interest, there must be evidence that you will suffer a financial loss. Okay, good stuff. Whenever I change to the next section, I presume you can take a break. You can pause the video and just come back and listen to me again. But I'm just going to continue because I want to get done, and also it uses more data the bigger the video is. Okay. Differences between indemnification and security. There is a possible loss is insured, but here with security, it is basically a certain event. So that's why I said earlier, indemnification is linked to the possible loss, okay, to the insurance part of the principles of insurance. And then security is based on the assurance part. So if someone takes out an assurance, then they will talk about security. Okay. Yeah, they talk about long term, and they talk about short term. Any three of these facts should be okay for the exam. Okay, they will not ask you all 5 facts on each one. So 3 of them, look at which ones you understand, and the amount may be paid out to cover. That looks something that is graspable, not difficult to understand. So you take that one and you take that one as well, hand in hand together. Okay, but only 3, not all 5, because you don't want to break your brain. And also, like I said, it is about knowing a little about a lot of stuff, much more than knowing a lot about a little. And then you are in a pickle when maybe that question doesn't come up in the exam. Okay. Viability and relevance of insurance for individuals and businesses. This is the ability of the insurer to pay out when it is necessary. Okay. So there will be, like, you'll hear about people that talk about the insurance made them wait, and OUTsurance is the best because they respond promptly and those types of things. Okay. It is important to select a reputable and well-established insurance company. Insurance must make financial sense, as insurance costs can be high and they are often based on risk factors. Like I said, if your car stands on the road, your premium is much higher because it's based on the risk factors. Okay. And I don't know if you guys saw there was like a blizzard thing in America that made all the cars slide into one another. And then I just want you to understand that a lot of the insurance companies are going to have to pay out those damages. Okay. Insurance must not cost more than what it is to replace the goods. The insured must take all responsible steps to reduce the risk themselves, to inform the insurance company of the depreciation of the assets over time. This actually is something that I feel insurance companies need to work on. Because they say to me, if I pay insurance, right, then it's my job to lessen the premium. So I have to phone into them to say to them, listen here, my asset depreciated, so you must lessen my premium. I feel like they need to do that. Or I suppose if you want to go into the insurance business, then that, I suppose, would be your opportunity to make that the number one thing. That if for a year your insurance premium stayed the same, we will call you back and then we will evaluate your assets again and lower the premiums on all your assets. That's sort of the service that the insurance provides. And in that way, then you become more competitive. So maybe that's something that a business can do. Okay, and then we're moving on to our last section, which is compulsory and non-compulsory insurance. Okay. There are your types of compulsory insurance: COIDA, RABS, and UIF. Okay, UIF, we all know, is part of our benefits when we get appointed a job. They're supposed to contribute 1% of basic wages to UIF, therefore reducing the expense providing UIF benefits themselves. Employees contribute 1% of the basic wage to UIF. So yeah, so employers and employees contribute to the UIF. Okay, all employees who work at least 24 hours per month are required to be registered for UIF. Okay, so if you have a domestic worker and they work for more than 3 days, you are subject to register them for UIF. Okay. Is an affordable contribution that makes it possible for businesses to appoint substitute workers in some instances. And the business cannot be held responsible for unemployment cover, as the UIF pays out the contributors directly, dependent of deceased contributors. Last one, businesses are compelled to register the employees with the fund and to pay contributions to the fund. Compelled to register. Okay. And it is definitely frowned upon if you don't, and you can go get taken to labor court, go into CCMA and labor disputes. And I've heard of cases where employees actually win cases against businesses for not registering them for the UIF. So always register your workers in the UIF. Okay, benefits of UIF, unemployment benefits, we are good with that. Read through that, people. Make sure you have at least 3 or 2. Illness benefits, maternity benefits. This is with pregnant employees. They receive up to 4 months, consecutive months of leave. Adoption benefits. If they adopt a child younger than 2, take unpaid leave, receive while caring for the child at home. And independence benefits. If you are the breadwinner who has contributed to the UIF, and the spouse of the deceased may claim whether he or she is employed or not. Okay, RABS, it's basically if you have an accident in South Africa, then this covers you, and you are paying for RABS through the petrol. Okay, RABS is funded by a levy on the sale of fuel, diesel, and petrol. The amount can be claimed for loss of income is limited by legislation. Okay, so these are quite detailed information, but for me, it is about you being comfortable with at least 4 facts under each of these compulsory insurance. Okay, so my take is read through all of them, look for 4 and memorize them. And if there aren't 4 that you can memorize, then please inquire about 1 or 2 facts that maybe you don't understand, and then we can talk about that. Okay. Then the difference between compulsory and non-compulsory insurance is basically one is required by law, other one is voluntary. One is regulated by government, other one is you go into a contract with the insurer and the insured, and there might be a possible insurance broker as well. With non-compulsory, you have annual payments. With compulsory insurance, you're paying levies that is normally part of your salary. Okay, so know the difference there between the two, and yeah, know the examples as well. It's good to have the examples. Multi-peril, just so you know, is basically when we talk about the theft, those nitty-gritties, losses, theft, fire, housing, damages, any damages maybe. You get those people that phone you for cracks and dents like on your dashboard, not your dashboard, your bonnet. That's all multi-peril insurance. Okay. And then we are done, people. So the concepts is very important here. Like I said, you must have a good definition, good understanding of RABS, good understanding of COIDA, good understanding of UIF. Okay. Then that the differences, must know the differences. Very nice marks to get and not difficult to understand. But if you don't know your way around the chapter, it's going to be difficult for you to sort of get different facts for this and this information, because insurance and assurance is so similar. If you don't understand the difference, it's going to be difficult for you to like use your logic to get to a definition. Okay, and hence I always say prepare yourselves, prepare your definitions, prepare your summaries, and make sure that when you go through this information, you write down a couple of terminology so that you can use it when you are reciting the information. Remember, I always say, if you can't explain the advantages of insurance for business to someone else, then you don't understand it, which means you must go back and you must read through it again. Okay, maybe you must go and check the definitions of a couple of words so that you can have a better understanding of what the sentence is saying. Okay, but that's basically what you need to do. That's the work you need to put in. So yeah, this calculation, people, very important. Easy marks if you know what you're doing. Devastating if you see there's a 6-mark question for calculation and it's as easily as just identifying what numbers go where. Okay, so spend some time on that, 20 to 30 minutes at least, just doing the calculation, writing it out, not just looking at it like this, but reading the question and writing it out so that you get comfortable with writing it out. Also, you get a bit of muscle memory. So your hand and your brain and your eyes will remember what you wrote. So it will be easier for you to remember. Okay, so I always encourage writing down the information while you are going through this video, please, people. Okay, and then those general definitions there of over and under insurance. They will ask you about the average clause. If it's not in the first section with the multiple choice, they will ask you to define or to say what is the average clause. Okay, all good. When you are going through your papers, I told you already, go to EC exams. EC exams.co.za. That is where you can find nice question papers. I found this question paper there. It's 2021. I think it's the middle of the year exam, which is similar to the one that senior certificate examinations, right? It's the same information because they're writing the same subject, same construction, same structure of paper, everything. Okay. So what I would like you to do is download this paper, or if you have it, open it, and then just go through the information and check leadership style. So that's not insurance, so that's fine. The dividend on what that shares, that's investments. No, this is forms of ownership. Okay, that's not it. That's not it. Okay, then auto insurance applies the what clause? I say the average clause. Okay, so that information there, you can get some exposure to how to do a question paper. Okay, here's a shareholders thing again, so that's investments. Anywhere else there is insurance? No. So there's only one insurance question in the whole of the section 8. Okay, just be sure there to be cognizant of that. But then in the third section, there's a compulsory insurance there. What is a compulsory insurance? It is basically insurance that is required by law. So let's check here. We say, okay, it's required by law to register with the compensation fund. So that one goes over there. Okay, so you must know your work. And people, I want you to see that this definition is coming from here where we were now. Here's it. It's required by law. There are legal obligations for it to be taken out and paid for. Okay, so that is required by law. That gives you the marks. You don't really need to understand that it comes from the compensation fund. If they talk about the compensation fund, you should know that it is also part of COIDA. Here's the compensation fund. Yeah. Do not have to contribute towards this fund. Okay. Okay, but there is always a compensation that you need to pay. Okay, cool. Happy. So the question paper is very similar to the notes that we work through. So I am telling you again, you won't go wrong if you go through this information quite vigorously. And please, when you see something like this with 9 bullets, only study 4. Okay. All good. Go and download this question paper, please. Go and download this question, please. Look, see there. There's another question you can look at. Discuss any 2 principles of insurance. What are the principles of insurance? Utmost good faith, we spoke about. The information that you provide to the insurance company must be of honest and good intent, so that they don't refuse to pay out when you claim. Okay, that's the first thing. And then insurable interest, I remember, and I'm just trying to show you, yes, I have been teaching this stuff forever, but that's the way you need to remember the information. So I'm modeling that to you. Okay. The second one was insurable interest was you need to give proof that you are suffering a loss when this asset or car of yours is going to be lost. Okay. So all good, people. I think it's all good. If there's any questions, let me know. But yeah, this is a nice paper to download, the 2021 paper, May and June. Check it out. And yeah, if there's any questions, just make sure you let me know. Okay. Hala. Peace.